and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real options trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. It helps you read the numbers a whole lot easier. Have a calculator ready so we can do some easy math. And finally, just remember, this is not financial advice. This is just for entertainment purposes only. All right, so check on our open positions. We've got a SPY put vertical that we're short. Opened it at 32, marks at 64. We're exactly flat. All right, gold. I think gold's moving up again today, but that's fine. The rest of these gold through Roku are all November expiration. The SPY is December expiration. XOP, we're almost back to break even. Oh, no, wait, no, sorry, XOP. Oh, we're almost closing on XOP. We're trying to get to 32. Right now, marks at 38. If XOP keeps falling today, it should close today. If it does, we'll go over all the numbers tomorrow morning. Macy's, trying to get to 49. Marks at 115. I know we've got earnings coming up in a couple weeks, so we're going to wait for that. Roku moved against us a bit. Down $70, but that's fine. I know earnings for Roku are the first, so next week, Wednesday, I believe. So we got some time on that one. And I'm okay holding it through earnings because it's a spread. So we've got our downside defined. All right. Cool. Let's look at some new opportunities. First, Microsoft. Post earnings move today. Here's our chart. Let's look at the call side, see how the call side looks. Right now, we're trading December expiration, okay? No more November. If you sold the 375 and bought the 380, let's get our calculators out. You'll take 234 minus 167, divide that by 2, and divide that by 500. 6.7%. That's not bad for a post-earnings move. So with December expiration, there'll be no earnings involved here. 375 on the chart. Where's that? $375 would be all-time highs. That's all the way up here. That's not bad. We're going to keep a mark on Microsoft call side. Next up, Google, down today. This as well as a post-earnings move. Let's see what the put side is at. If you sold the 115 and bought the 110, it's 122 minus 69. Divide that by 2, divided by 500. Only 5.3% on the put side. The call side, the 140 is too close, and the 145 is too far away, so we'll skip this one. Let's really quick look at the other Google, different class. Does it pay any better? Better than the 5.3. 137 minus 76 divided by 2 divided by 500. That's 6.1%. But this strike of 115 is a little close. On the call side here, if you sold the 140 and bought the 145, that's 120 minus 56. Divide that by 2 and divide that by, 120 minus 56 divided by 2 divided by 500. 6.4% on the call side here. I'd rather do this call side on Microsoft. You got 6.7%. All right. Next, Boeing post earnings. Not down that much. Here's your chart on Boeing. It could catch a bounce somewhere around 174. On the put side, if you sold the 155 and bought the 150, what do you get? 162 minus 112 divided by 2 divided by 500. It's 5% on the nose. Not as good. I still like Microsoft so far. On the call side, if you sold the 200, bought the 205, that's 209 minus 136 divided by 2 divided by 500. That's 7.3 on the call side. Selling the 200 and buying the 205. You look at our chart, here's the 200 strike right here. That's interesting as well. But like I said, I could get a bounce somewhere around 170, 174-ish, 172. Boeing on the call side is interesting. We'll put a mark on that one too. Next up, Affirm. AFRM. Down 11%. Earnings for Affirm are the 8th of November. We're too close. We got a downgrade here on Affirm. We're going to skip this one for now. We'll wait for after earnings. Texas Instruments, TXN, down 4.5% today. Earnings were yesterday after the close. That's why they're down. Oh boy. Here's our chart. Could catch a bounce around 135. Let's take a look at the put side. This is December. You'd have to go out to 125. I don't think you're going to get paid for it. If you sold the 125 and bought the 120, that's 112 minus 63 divided by 2 divided by 500, only 5%. Skip the put side. On the call side, if you sold the 155 and bought the 160, that's 79 minus 33 divided by 2 divided by 500, 4.6 on the call side. Not that great. Next, Etsy. Is this earnings or no? Earnings are in the first. We are too close to earnings. We got a cut by Citigroup today. Etsy's not looking good. We'll follow up with Etsy. Look at this post-earnings move last time. So a big drop last time and just a continual move down. Horrible. All right, let's move on. Gap. Think it got an upgrade today. Let's take a look. Earnings are on the 24th. That's exactly a month away, so we got some time here if we want to do something. Here's our chart. Let's look at selling the call side here. Is it worth it? You'd have to sell the 16. And what are you going to buy? The 17? Unfortunately, when you get smaller stocks like this, it's only a $13 stock. You don't really get paid for it. On the put side, I don't want to sell the put side anyways. We'll skip this one. Close. Next, Verizon Wireless. I think we're past earnings on Verizon. Earnings were yesterday. Yes, correct. Maybe got an upgrade or downgrade today. If you sold a call spread yesterday, probably making money today. I think we looked at it, but we didn't pull the trigger. The 36 is too close, and the 37 is too far away. On the put side, if you sold the 31, you'd have to buy the 29 just because the 28 is too illiquid. Let's skip this one. Next. What is this one? Wabtec. Earnings. Earnings for today. Here's our chart. It's coming up to the 200-day moving average, so that's interesting. Let's look at the call side here. If you sold, this one's too illiquid. See how the spread here is 75, 105? This is way too illiquid. It's going to be hard to get filled, and if you need to get out of it or need to roll, it's going to be very hard to do that too, so we'll skip this one. Next, Ross. RST. Earnings are the 16th. Awfully close. Here's the chart. I wonder what was in the news. Upgrade, downgrade, maybe? I don't know. got some liquidity. That's good. On the put side, actually no, it's not as good as I thought. It's too liquid here, especially on the call side. Let's move on. TMD, thermodynamic. Sorry, TMO. Can't read my own handwriting here. Earnings are the 25th. This earnings are today. Bad report, I'm guessing. Where can it catch support? Should catch support around. We're actually pretty close to support, around 410 or so. So that's not bad. Let's see what the put side is. Not very liquid is the answer. If you sold the 380 and bought the 370, these spreads are too wide. 280, 330 here. Close, very close, but no cigar. Let's move on. Danaher. I think we looked at Danaher yesterday, right? Earnings were yesterday, right? Yesterday. So this is now post earnings day 2. Same thing as thermodynamic. Big move down after earnings. It's continued. So volatility is probably still high on this guy, and should catch a bounce around 175-ish. Let's see if there's liquidity on the put side. Not really. You'd have to sell the 165. Actually, the spread here is only 5 cents on both of them. Sell the 165 and buy the 160. Not a lot of volume, not a lot of open interest. Let's do the math. 182 minus 127. Divide that by 2. Divide that by 500. 5.5% return. I still like Microsoft on the call side better. What does the call side look like? 200's too close, 210's too far away. Let's move on. Square, block. Earnings are the 2nd. So, we traded Square a couple weeks, maybe a month ago. I can't remember. Successful trade. We will have to wait now till after earnings. Look at this again. Post earnings, sell off, and it's never recovered. It's really bad, especially if post earnings last time you sold a put spread, you got slaughtered. That's why I prefer to sell spreads instead of strangles, just because of movements like this. If you sold a cash secured put or naked put here, you've been losing this entire time all the way till next earnings. So the spread defines your losses. All right? Bad. Next. TransUnion. Day after earnings. Correct. Good. Here's our chart. We're going to be looking at the put side. IV rank is still high. To go all the way back to 2017-ish. It should catch a bounce for sure, right around 43 or so. This is an ugly chart as well. You should be getting paid for the put side here if you're taking that risk. No liquidity though. You'd have to sell the 40, and your spread here is 40-70. You want to stay away from your liquid stocks and options like this. Next, Intel, INTC, getting slaughtered, yeah. Earnings are tomorrow. All right, so we'll come back. What is today? Wednesday. We'll come back Friday morning. Look at Intel. Intel's not doing well either. He may get bounce here. It just depends on the earnings report. We'll come back after earnings. All right. Next, let's look at the TLT. Down again. I know we talked about selling puts around 82.5 maybe. Yeah, we never got around to it, but it's probably for the best. I have to go back to the 2007 lows. Waiting to sell puts here, but look, when the bond market moves, it has these big moves down. So this could keep going and going and going way past 82.5. But if you want to open something, be my guest. I'm not going to. If you sold the 77 and bought the 73. No, sell the 77, buy the 72. Sorry, the dog's back there. 71 minus 26, divide that by 2 and divide that by 500. Only 4.5%. You're not getting paid to take the risk on the put side. On the call side, maybe it's better. If you sold the, I don't know about the 90, you're not going to get paid for the 91. If you sold the 90 and bought the 95, what do you get? 76 minus 27 and divide that by 2 and divide that by 500. 5%. On the call side, to be fair, this is a bond ETF, so it shouldn't be that volatile. Where's 90 on the chart? 90's right about here. Again, doesn't mean it can't get there. It most certainly can. But if I wanted to sell the call side, you'd want to wait till it has these movements up. You'd want to wait till it has a movement up, till it gets around 97, 96, and then sell I'd sell a call spread around 98, 99, but not yet. I wouldn't sell a call spread down here. That's why you get paid a little bit more for it. Next, CRM. I think these are all the follow-ups now. CRM earnings, December 6th. That's great. We're probably looking to sell the put side. It's definitely had a big move up this year. Let's see on the put side. If you sold the 175 and bought the 170, what do you get? 266 minus 200 is 66, obviously. Divide that by 2, divide that by 500. 6.6% if you sold the put spread. Interesting. What is our spread there? It's 175 on the chart. 175 is down here. That seems fair. I don't know. I'd still hold on this one. The put spread is interesting though. Next, NVIDIA. Earnings are the 21st. We're less than a month away. I'm going to take NVIDIA off the list now, just because they're too close to earnings. Tesla. Earnings are January 24th. Great, we are past earnings, and it's had that big move down past earnings. Let's see, on the put side, if you sold the 175 and bought the 170, that's 307 minus 248. Divide that by 2, divide that by 500. 6% on the put side. On the call side, if you sold the 260 and bought the 265. 360 minus 293. Divide that by 2, divide that by 500. 6.7 if you sold the call side. So you definitely get paid more to sell the call side. 260 on the chart is where? Awfully close. Way too close for comfort. That's why you get paid for it. 260 is right about here. I'm going to pass on this one. Netflix. Earnings are past. It gapped up and has this continual movement here. I think we talked about selling a call spread somewhere around 435-ish. We're not there yet. We're getting closer though. Let's take a look on the call side just for fun. If you sold the sell the 470, buy the 475. That's 427 minus 357. Divide that by 2, divide that by 500. 7% on the nose. It's tempting. I'm going to wait for it to move a little bit higher and then go for it. All right. China's next. K-Web. That's right. We were waiting for it to move up and sell a call spread. I don't want to do anything with China right now, but we'll keep it on the list. We'll continue to monitor for it to have this move up that we're waiting for. Finally, JP Morgan is on the news list. Follow up. This is now post earnings. Boy, the banks I'm sure if we look at Wells Fargo, Bank of America, and Morgan Stanley, they had a similar reaction down for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions in a row. That's why volatility is still a little bit heightened here. On the put side, if you sold the 125 and bought the 120, 101 minus 64 divided by 2 divided by 500, 3.7. Not worth it. On the call side, the 150 is too close and the 155 is too far away. What if you sold it? 125 minus 46 divided by 2 divided by 500. Yikes, 8%, but you're awfully close. Where's 150 on the chart? That's not bad, honestly. %8 selling a call spread in JP Morgan. That's really tempting. You don't get to see that often. You're getting paid to take the risk. I mean, it's been down 8, 9 sessions in a row. Man. Let me take a look one more time. Selling the 150 and buying the 155. That's tempting. I'll keep it on the list. That might be better than the Microsoft trade. Let's go to our IV rank scanner and we'll sort by volume. SPY, heightened volatility still. We have our position open, but if you want to open something today, SPY. December expiration on the put side. Here are my strikes. The 393, the 388. If you want to open today, sell the 392 and buy the 387. That's 359 minus 297. Divide that by 2, divide that by 500. 6.2% if you want to sell a put spread here. Not bad at all. On the call side, you have to go all the way down to 447. So if you sold the 447 and buy the 452, that's 159 minus 95. Divide that by 2, divide that by 500. 6.4% if you sold the call side. So pretty much even on the call and put side, and that's because the SPY is kind of in no man's land here. It could get a bounce here, which I'm anticipating, and move up, or it could keep moving down and not catch a bid till 380. I don't know. We got to take a risk. It is the S&P 500 ETF, so it's not as volatile. I know it's IV rank here for the 30-day is 61%, but still that's not that volatile. Next, we're getting through some earnings finally. Nvidia has earnings. We already looked at that. Amazon earnings tomorrow after the close. We'll follow up with Amazon on Friday. Apple earnings. TLT we already looked at. Bank of America, like I said, the banks still have heightened earnings just because of the sell-off after their earnings report. Meta is today after the close. So we'll follow up with Meta tomorrow. AMD, Halloween. PayPal, November 1st. Boeing, we already looked at Boeing. Block, already looked at Block. Earnings for Intel. GM. GM is past earnings, right? Let's take a look at GM. They got to get their strike issues figured out. Earnings were yesterday for GM. Not crazy about this one. What does the put side pay? If you sold, let's see. If you sold the 24 and bought the 22, if you got a small account, you're risking $200. 37 minus 17 divided by 2 divided by 200, 5% on the nose. Let's go back. Palantir earnings, Coinbase earnings, Pfizer earnings, gold. Let's look at the GLD. We have our position that we're going the wrong way on. We've got a call spread open. If you want to open something for December, mine is a November expiration, so you won't see it here on the list for December. But if you want to sell a call spread on December, we sold the 193 and bought the 198. That's 150 minus 85 divided by 2 divided by 500, 6.5% still. So gold is still paying, all right? That's pretty good for gold. And it's not as volatile. Volatility is going to be coming out of this guy. Gold doesn't stay volatile for long. Visa had earnings. Texas Instruments we already looked at. Affirm we already looked at. Citigroup. SoFi. All right, let's go ahead and place a trade. We have to choose between JP Morgan 8% or Microsoft something like 7. Let's look at Microsoft again. MSFT. Here's our chart. Post earnings. It's already selling off. Let's look at the call side for December. We sold the 375 and bought the 380. Is that what we picked? 196 minus 132 divided by 2 divided by 500, 6.4%. Was that the strike or was it the 370? I think it was at 370, that's why. 370 is here. 375 is here. On the call side, maybe we'll go back to JP Morgan. JPM on the call side. What was the strike again for the call side on JP Morgan? It was 150. Yeesh. Man. Definitely getting paid for the risk. Let's go with Microsoft. MSFT. We're going to sell the 375, I think. If we sell the 375 and buy the 380, let's do the math one more time. 198 minus 132 divided by 2 divided by 500, 6.6%. That's not bad. Let's do it. We're going to sell the 375, buy the 380, Microsoft call spread December expiration, okay? We'll go to verticals. December. 375, 380. Is that right? Why is it so liquid? Oh, never mind. Liquidity is not good here. My bad. We're going to skip Microsoft. I didn't realize the liquidity was that bad. Like we got the 175, 222 spread and 119, 145 spread. Okay, guess we're going to do JP Morgan then. JPM. We're going to sell the 150, buy the 155. Okay. This 150 is awfully close, but we're getting paid 8%. One more time on the math. 119 minus 46 divided by 2 divided by 500, 7.3%. When we do the spread, we'll get around 8%, okay? So we'll go here to verticals. Selling the 150, buying the 155. This one's a liquid too. Hold on one second. Let's open it. This is not... The 155 strike is fine. It's only a 3-point spread, but the 150 is kind of a liquid. It's not as good as I'd like, but 150, 155. All right, let's do it. We're going to sell one December expiration 150 strike on the call side, and we're going to buy one December expiration 155 on the call side. It's going to be limit credit. We want to see where credit here, okay? And we're going to keep 81 here. All right, we'll preview this. Double check your ticket. All right, sell one December 150 call to open, buy one December 155 call to open. We're going to receive a credit of $81. That's important. Make sure you're doing a credit, not a debit. We'll send that out. It'll hang out here open all day. It's not as liquid as I'd like, but if it gets filled, great. We will set a close order at 40 cents. So if this does get filled, we will set a buy to close, good till canceled order, limit debit at 40 cents, okay? And that'll do it for today. I hope this gets filled. This is a good one. All right. Thank you for watching. Tune in every morning live, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We trade options live every morning together. If you want, subscribe. You'll get alerts. And also tell your friends to subscribe and trade along. If they're having trouble trading options, we'll all do it together and learn together. All right. Thanks so much for watching. See you tomorrow.